Alrighty, so let's tackle now our at acquisition journal entry, our pro forma journal entry. And you can see that we're still working on the scenario where it's a wholly owned subsidiary. So we know for the first part of our at acquisition, we need to go and remove the equity related to our investment. To remove the equity in this question, we can see it's just the share capital and then the retained earnings. But it's not this retained earnings, it's going to be the retained earnings as of the date of acquisition. That's the amount we're going to be using. So, to remove our share capital, we're going to debit share capital, flowing through equity, and that amount was for 80,000 Rand. We're going to remove our retained earnings as well, so debit retained earnings flowing through equity. And that amount as of the date of acquisition was 50,000 Rand. So now that we removed the related portion of the equity in the subsidiary, we now need to go and remove our investment relating to that. So to remove our asset, we credit it. Credit investment in Y Limited. Investment in Y, and that's statement of financial position, and the value is 152,500. 500. But we can see from this journal then, it doesn't balance. There's a missing figure here. So if you add it up, you're going to see that the balancing figure is going to give you a debit. Now in this case, we paid more for the actual value of the entity. When you pay more, it gives rise to goodwill, which is an asset, so it's statement of financial position, and the difference is 22,500. Don't forget to put there, it is a balancing figure of this journal. And that is the at acquisition journal.